Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader. I wasn't going to do a Swing Trading Today, but given the price action yesterday and what I'm seeing setting up right now, possibly on gold, is a bit concerning. So I figured, what the heck? I have some member stock chart requests that I did last night, but I'll play them for you as well this morning. I recorded them last night for members on Market Wrap. And I'll segue into those right after we review the pre-market activity. Before we start, if I could ask you just to like this video if you're watching this on YouTube, leave a comment, follow me there. I would really appreciate it. It helps me out. The more likes, comments I get, the more YouTube will recommend the video to other people who are interested in the same topic. So that's really the key reason. So I appreciate that. Let's segue into the pre-market activity. Let's begin with the S&P 500. Yesterday morning I mentioned that while we were down on the morning, we had reversed off the lows, and I did predict that we would get a rally off the lows of the session. And we got that rally, but it was very short-lived, as one might expect, given the momentum oscillators, which are very, very weak. But we did not break down to take out Monday's lows. So what we're looking at here is a market, an index I should say, that is in limbo. So it's at this point, because I'm entertaining getting short of the market yet again. We booked our profits to the short side earlier this week on the semis and on the S&P 500 on Monday. As we sold off, we booked profits into strength. So here's what I'm seeing this morning on the S&P 500. So while yes, we broke out yesterday above this resistance line and we've been consolidating, we are now breaking down below. What has formed here is a triangle formation. So this breakdown is not looking good. We may pull back, retest the lows, and then rally for all I know. But we are down this morning and we are breaking down below the lower band of support on the S&P futures. Let's check out the NASDAQ. A similar setup here. So we broke out above resistance. Now, what we're doing is we're sitting with an index that is yet again coming under pressure. But the question then becomes, do we do a retest of the week's lows right here, or do we break? And if we break, we'll be looking to lean into the short side. When you take a look at the news coming out of the FANG names, it's just horrible. I mean, Google can't get out of its own way. I mean, a great company, but the news coming out of Google is just a public relations nightmare. And now you have the vice president that is tearing into them. And it's just a matter of time before they have congressional investigations and quite possibly some antitrust action against Google. And it doesn't help that they're helping with their Dragonfly product, the Chi-Coms, and yet they won't work with the Pentagon. I mean, it's like you're picking a fight with the sleeping giant, which is really just beginning to awake here in the States. And I don't know why they're doing it other than ideology, and ideology really has no place in business. And I've warned about this for months now. I've done videos on it, and that's when Google was making all-time highs. Now it's breaking down, along with Netflix, Facebook, abysmal, Amazon, and Apple not so much. I'm going to segue into a video on Apple in a moment, so stay tuned. So these are the stock market indexes showing some weakness this morning. Let's take a look at the US dollar. Now, I meant to go over last night with members the reason why rising interest rates are good for gold and silver, the miners, and why declining interest rates are good for the miners, silver and gold. You rarely get the situation, but I believe that it is forming. Why is that? And why did I forget it last night? It's because I was unscripted, and by the end of the video, I had completely forgotten that I was supposed to go over it by the time I got to those charts. But those are the risks of being ad hoc in your commentary, as I'm doing right now. So let's get to it before I forget. The dollar is putting in lower highs. And as I reviewed with members last night on the daily charts of the UUP and the Dixie, we're seeing a lot of topping action. What do I mean by that? Topping action vis-a-vis wicks, shadows on top of these candlesticks. That means that every time we rally, we're seeing sellers move in to take the dollar down off its highs. We're seeing hollow-filled candlesticks on a daily chart. What does that mean? It means that rallies are being sold. Remember, this time yesterday morning, we were rallying strong, right here. This is where I was recording. What happened? We reversed. We closed down on the day. That's very bearish stuff. So why is that? Well, and why is it that rising rates are good for the US dollar? Remember that the United States is in excess of $21 trillion in debt. We have a Treasury Department, yet there's no money in the Treasury. We have IOUs. They're called dollars or Federal Reserve notes. And we print them on a whim. So each time the yield goes higher, the amount of interest that we must pay on our debt increases as well. So where do we get that money from? We print it out of thin air. What does that do to the US dollar every time we do that? Well, it weakens the dollar because it has no value. Because it reduces its value, its perceived value. Now, if you're wondering why the president came out yesterday yet again, now we've been talking about this here. If you're wondering why he came out yesterday and made this statement in an interview that he was unhappy with the job that the Federal Reserve was doing because they're raising rates too quickly, it's because he's not a dumb guy. He knows what's going to happen if yields continue higher. The market's going to come under pressure as it has been. And the last thing he wants is the market under pressure in advance of the midterms. These midterm elections will make or break his presidency. Now, why is it that a weakness in yields will help the gold and the gold mining stocks? The reason is that the proximate cause of the decline in yields will probably be related to dovish statements out of the Federal Reserve. What will that do to the US dollar? It will weaken it because you have the Europeans, which have yet again, I don't believe they're going to follow through, but yet again talking about unwinding their QE program, while the Federal Reserve would be speaking a bit dovish, indicating that, you know what, we're going to pause here. And that will put a bid under the euro, especially if the EU's tiff with the Italian government and their budget is resolved. You're going to see the euro rally. And you'll see the euro rally relative to the US dollar. And if you take a look at gold versus other major currencies, gold is in a bull market. It's only in US dollars that gold is not rallying. And that's because it's priced in US dollars. So how is the dollar setting up right now? We had a little bit of strength overnight. We recaptured a support level. Now we're leaning into it. It could quite possibly be a retest. I'm not going to be the least bit surprised to see a break here at some point in time. Now, as for gold, gold is coming under some pressure. We can't seem to hold the 1200 level. And we have a possible double top here at 1195. So what we're looking for is a rally up and through it, this upper band of resistance. We are forming a flag formation here. We may retest this 1187 level. And if you're wondering, how would the Federal Reserve maintain their credibility, but we're going to take a dovish stance towards interest rates, perhaps even for the month of December, how they'll do it is simply they'll have one of the Fed governors come out who is normally hawkish, give a speech, and have a dovish tone, and that will send the markets higher, believing that yields will stay at current levels. Now, I will caution here, we have a possible head and shoulders setup on the dollar. Left shoulder, head, right shoulder. Here's the neckline here, right here. You don't want to see a break below 1185 on gold. That would spell some big problems here. That would take us all the way back down here to retest 1167. That would be a problem. Folks, let's segue over and into the charts that I reviewed for our gold members. Everybody have a profitable trading day, and please follow me on YouTube, leave a comment, click that bell button, and get notified of future videos. If you watch this on the website, enter your email address. We hate spam too. You'll not be spammed, and we'll send you out a couple of free trade tutorials. Again, everybody have a profitable trading day, and be well. For Cynthia, Apple, daily chart. You know what? Let's go to a weekly chart first. The weekly chart is looking really, really good. I have to say that. Apple is holding up very well relative to the market. Now, the key here is to identify whether or not Apple will be able to take out this prior high at 233.47. It's at times like this where I always like to say the test is always at the top. Now, what should be concerning for you as a potential long, if that's what you're thinking about, is that last week we flashed a bearish key reversal. So we were up on the week and we closed just off the lows of the week. This week, no new weekly low. We are up on the week as it stands right now, but the week is still young. So me personally, I would wait for this reversal bar to get negated. Meaning, I would wait for a breakout above 233.47, or at least wait for another couple of weeks of consolidation. Then what you want to do is take a trend line. We can go over this again. Connect the peaks of each of the next week or so. And once we get a breakout above resistance, then you could put a small trade on, see whether or not it takes out 233.47, and then on a close above that level, you could look to add more. Lower highs on ADX green, that's not good. Possible double bottom in red. Daily chart. Oh, by the way, RSI is looking good. We've broken out on RSI out of this triangle formation. Stokes are looking good, higher lows. But again, this is a weekly chart, and it's only Tuesday, so a lot could happen. Daily chart, we were weak. A bullish reversal day today. And again, the test is always at the top. Do we rally to take out 233.47 and close there, or do we fail? Now the Stokes, which are declining, you have the fast line beginning to level off, possibly begin to hook back up. That's good. RSI has already done so. So there's reason to like the chart. Volume could be better, but there are reasons here to like it. But don't forget, the strongest of stocks are going to decline when you have a serious stock market correction, or at least hold in place. So if you decide to get long of Apple as it makes new higher highs, despite the fact that the market is putting in lower lows, I would stay small with the trade. Very small. Disney, this is for a fellow member Kumar. All right, so Disney's looking really good here. Let's go to a weekly chart. We're in a tight consolidation between 114 and 118. We get a close above 118. It's game on to the long side. Disney's looking very, very good. We've been in a consolidation for several months now. Stokes are rising. The chart looks good on a weekly basis, but again, the week is young. Daily chart, we popped higher today. We recaptured support. We closed off the highs of the day, though. So do we hold this support level? That's the question that I have. Then the second question is, do we break out to put in new higher highs, or do we fail? And if we fail to take out 118.10 and then break down below the prior low at 114, look out to the downside because shorts are going to lean in. So don't go catching a falling knife here if we pull back and take out 114. Let's leave off with Continental Resources. I discussed it this morning. We had another lower low today. We held the 50-period moving average and rallied. The jury's out here. So it's in a situation like this that I want to take my trend line out and say, okay, here's my rules-based approach. I will not buy this stock unless of course, it breaks out above this upper band of resistance and closes there, or appears poised in the final 5 minutes of trade to be ready to close above it. Then if it pulled back and retested, I'd nibble a little bit more. And I would add a lot more if we rally on a weak dollar. That will help most of the resource plays. So while this is an ugly chart, this past several days, I still see a diamond in the rough here. So don't lose hope here. But if we break down below today's lows and we appear poised to close back down to this trading range, I would avoid the shares and I would probably stop out as well. That's it for tonight, folks. I will talk to you tomorrow. Have a great evening and be well.